Welcome to the Investor Coaching Show, a podcast to help you get an insider's view of the financial world and escape common investment traps. We look at the financial news of the day and help you make sense of it so you can relax about money. And here's your host, Paul Winkler.
All right, we're back here on the Investor Coaching Show. I am Paul Winkler. He's Evan Barnard. We're talking money, investing. So I just doing a newsletter the past couple of days for clients. So expect that. One of the things that you'll often hear me say, in commercials and newsletters and those types of things is, one of the things that we want to do as investors is people want to make lots of money. They want to make sure that their money works as hard as it possibly can for them and makes the most money for them. And often what you'll hear are all kinds of ads on products that, guarantee very, very high rates of return. Sometimes you hear stuff like 30% guaranteed return, 10% guaranteed return, 30% on your money bonus, and 10% guaranteed returns, or it'll be some variant of that. Mm-hmm. And you go, wow, if I'm going to make some good money, that's one good way to make money. And my premise is that you might want to be the person selling that stuff if you want to really make good money, because that's where the really good money tends to be. And I was on Facebook this morning. I don't go on there for very long, but I went on there just to check, just see what's going on. Wish people a happy birthday, that I want to wish a happy birthday to. And this ad comes across, and it's this guy training people to sell annuities. So I went out to look to see if I could find anything on these people out on YouTube.
And this is a different guy than a few weeks ago?
Yes.
Okay.
Yeah, different one.
Okay.
Different one. And it doesn't take me long to find stuff. And I did. I found a nice little program, and they were interviewing this guy, and they're doing a tutorial for all these different advisors, financial advisors, as they call themselves. Uh-huh. And this is what this guy had to say. Check this out.
So, perfect. So in August, when I started prepping, September is when I started hitting it hard, full blown, all steam. And so what I did about 270, 280, 280,000 in commission that month alone. And then on top of that, all my residuals and everything. I actually broke 300,000 in income that month alone.
There you go. That's not bad money if you can get it. What do you think?
Well, I was just doing the math.
$300,000 in 1 month.
I was just doing the math in my head. That means he sold what, 18 million in annuities?
He got a lot of people to sign on the dotted line. Let's just put it that way.
Yeah. Is there more of this?
Yeah.
Okay.
Yeah, because you got to go, well, why did he do it is the question.
Yeah.
Why did he do it?
Why or how?
No, why?
Okay.
That's the next thing. Why did he do this?
To try to see what I could do. And I'll give a little background here, Cody, for everybody on here. Why did I do that? And will I continue to do something like that, moving forward? Why I did that was because I started getting a name for myself, and it wasn't me that was doing it, it was everybody else, as the annuity guy, right?
That's a moniker you want, isn't it? The annuity guy.
Yeah.
Yeah, let's find the... it was like it's a nail in search of a hammer or whatever that.
Yeah.
That's right. Why did I do it? I'm the annuity guy. And what is it with being the annuity guy? I guess.
And I never wrote a ton of annuities. I just knew a lot about them. So I was called out by a couple people.
So, if you're really the annuity guy, show us how good you really are.
Oh, okay.
You see what I mean?
Yeah.
So it's like, is it just better for the client, or is it better for ego because I'm called this guy is my question, right? You see where I'm going?
Yes.
All right.
And they said, well, what's your production? And I was like, I have no problem telling what my production
is. What that reminds me of, Evan. I hated Friday morning meetings.
Yeah.
I hated them. I worked for an insurance company. And it was like, what did you do this week? It was like my value as a human was how much I produced. I did not last long in that atmosphere.
Yeah.
I hated it.
Our term was for the blue box was TWIP, which was our
TWIP.
shortening of their acronym TWP.
What is that?
Which was total weighted production.
There you go.
And every product had some multiple of, a dollar of a mutual fund was X, a dollar in a variable annuity was, X times 1.3, and so everything was about total weighted production.
Well, when I was selling things, I was always selling things, and a lot of the stuff had very, very low commissions because that was actually what was better for the client.
Right. Yeah.
And of course, you're looked down upon, when you do that.
Yeah.
There's something wrong with you. You're not out there selling the high commission stuff, and that's basically what I'm hearing here.
So that's what I did. And I said, but that's because I don't focus on it. And I said, well, what's your production? And I said, okay, well, I'll beat that in a month. And they're like, there's no way. I was like, okay, I'll beat that in a month. And I did. I actually crushed their production in a month.
Yeah. And what about the client? That's the question.
Right.
Really when it gets down to it. What about the client? Now, this guy has 4 steps to selling. Then this is a different person now.
Oh, okay.
So I got two different people here.
Got
Ready? Yeah, 4 steps for the person to be sold. You ready? Here they go. Here they are.
I want them to talk. I got things that I want to say, but I want them to talk. I want to hear what their education is and what their knowledge is of the economy.
So he's doing a sales presentation. This is an annuity sales guy. He's doing a sales presentation. The first thing that he does, this is good. Let the person talk. Find out what they know, what they don't know. So far so good. Step 1's okay.
And the stock market and finances. I want to hear them talk about what concerns they have. I also, in that same motion, this is a great opportunity for me to show my education and my expertise. Okay.
Now, number 1, he's talking and say, I want them to talk. Now I'm going to show my expertise. I'm going to show how much I know.
I want to be able to show them. I want to show them that I've been there before and I know as much as anybody you're going to get in front of about the options that are out there for your retirement money.
Okay. I know as much as anybody. That's
Yes.
quite a claim.
Yes.
Especially from a person that I couldn't find anywhere that he had more than an insurance license. No joke. I did. I searched. I was scouring the internet. And there was no evidence that the guy had the first financial planning designation,
Right.
No chartered financial consultant, chartered life underwriter trained fellow, retirement income certified professional, wealth management certified professional. None of that stuff.
Podcast.
CFP, certified financial planner, nothing. I didn't see any of it.
Yeah.
I know as much as anybody that you're going to get in front of. And I thought, well, wait a minute.
Well, now, maybe this is kind of like going back to Clinton. What is he knows as much as anybody he's going to get in front of.
No, that this is that the client is going to get in front of him. Let me replay that.
Okay.
I want to show them that I've been there before and I know as much as anybody you're going to get in front of about the options that are out there for your retirement money.
Yeah, I know. All those options,
Especially
right?
the safe options.
Oh,
that
the
are
safe
out there.
options. There you go.
Now, obviously, one of the big things I want to hear from them is I'm hoping to hear from them concerns about the casino stock market.
How do you like that, Evan?
That's not an emotionally charged word.
No, you don't think, huh? The casino stock market.
Those cancer sticks that they sell in the vending machine.
Yeah. So the stock market. So I own companies.
Mm-hmm.
The concern or what he's trying to plant the seed is you could lose everything.
Right.
Now, if I'm diversified, as we talked about, and we talk about all the time, tens of thousands of companies, you'd have to have tens of thousands of companies around the world simultaneously go bankrupt.
And never come back.
And with the insurance companies that he's trying to get you to buy, would they survive such an event? Number 1. Now, number 2, so that's market risk. Now, would you have all of your money in that? Is another question that you need to ask yourself. Would you have all of your money in stocks as you age? No, you wouldn't do that. But he's calling it a casino stock market because he wants you to think that investing is gambling. Now, I would submit that the way people approach investing many times is gambling. The way they actually approach it. But if you look at when I invest, hang on to things, and I often point out that what is it when you're owning stocks? You're owning companies. You're owning companies. Do you know anybody that runs a business?
Yeah.
And when they go to their business that they run, no matter what it is, do you think that they think of themselves as going to a gambling casino when they walk in their business to run their business that day?
Right.
No. So the reality of it is that we own companies. Now we own tens of thousands of companies all around the world to reduce risk significantly. And market downturns, when the market down from 1956, the data I always use, from 1956 till today, the downturns on average last about 111 days. Sometimes it's a little bit longer, sometimes it's shorter. But if you look back through history, the worst one we ever saw was the Great Depression, 1929 to 1932. And then it came up precipitously up after that. Even though we were still in a depression, you had significant increases in 33, 34, 35, 36. So you look at the worst downturn that we had ever been through in all of history. That's it, the Depression. But you look at years like 2000 through 2002, you had some areas of the market that went up and some went down during that period of time. So it isn't that when you're diversified that they all go down together either. So, a lot of stuff here. But anyway, here's how he finishes it.
Okay.
So he wants to get them to say that it's a gambling casino, gets them emotionally charged up because, of course, we're trying to get the person to do what it is we want them to do.
I want to get it out of their mouth, and hopefully the other spouse, if there's somebody else there.
Right. If you get it out of the person's mouth, if I say it, it's gospel. If you tell me something, if you tell me the market's a gambling casino, I may or may not agree with you. But if I say it, this is the client.
Yeah.
If the client says it, then he's got them. They're putty in his hands is really what's going on here.
To hear it and maybe even confirm it, that they're scared that the fact that they've got 85% of their money in an IRA.
Now, 85% of your money in an IRA, what does that mean? I could have 85% of my money in an IRA that's in a money market account.
It could be in cash. Yeah,
it could be in cash. That
doesn't make any sense.
Yeah, it doesn't make any sense.
Or a 401k or something tied to the stock market. Okay? I want to hear that come out of their mouths, because if I hear that come out of their mouths, I know I'm halfway home already. I'm making an annuity presentation / sale. Okay?
Yeah, there you go. That's what it's all about right there. Now, one real quick thing before I hit break. What's this presentation? No, I'll tell you what, after we come back from break, I'll hit this. What's the presentation itself?
Oh,
we'll get into that. Hey, just a note to you podcast folks, we just came out with a retirement income guide, and I'm super excited about this. There are all kinds of myths about taking income in retirement. People worry about running out of money, and rightfully so, because a lot of these myths can actually cause that. Now, the myths that you typically hear about, number one, dividends, living off dividends in retirement. Real estate, life insurance as a retirement investment, and annuities, and interest-bearing accounts, and target date funds. There are all kinds of things out there. What I want to do is put something together that walks through why those things are problematic, number one. Number two, the other thing that I wanted to do is walk through the evidence-based research on taking income in retirement. And we got a ton of data going all the way back to 1900. What's the logic behind it? And it's intensely logical. So we put that together, and all you have to do to download that, making it super simple, just go to paulwinkler.com/relax, and you can actually get into that very easily right there. So I would urge you to do that. Check it out, because I think you're going to really like it. paulwinkler.com/relax. All right. We're back here on the Investor Coaching Show. Paul Winkler, complaining about the chairs in my studio. To whoever will listen, which is, of course, Nick and Evan right here. Well, I guess Leviticus probably heard me complaining about the chairs.
We could complain to Cumulus, but it's your office.
That's true. It would do no good whatsoever. They owe me chairs. They ought to get me chairs. We'll petition Dave. Get him to give me new chairs. Okay, so this guy is talking about the 4 steps he was going to use to sell you on an annuity.
All right.
Step 1, listen to you.
Listen.
What is it you know? I want to know what you know. I suppose if you know too much, I'm not going to even try to sell you, because then, you may know more than me. Because the guy says, I know more than anybody that's going to be sitting in front of you. And I'm like, oh, wait, what's your education? insurance license. By the way, when I took the insurance licensing exam in New York, when I lived in New York, it was 10 times harder than the one when I got here. I moved to Tennessee. It was not even funny.
I was going to say, I bet the New York license was pretty tough.
It was way, way more complex than this one was. And it was embarrassing that they told me to retake it. And I sat through the class and I was sitting there going, how about, can I just get up there and teach the class? I mean, it was just like...
You're every professor's joy, Paul.
I know.
Can I just teach this?
I'm bored. Can I get up and teach? So, and then scare people. Call the stock market a gambling casino.
Yeah.
And say that it's got risk. And then he talked about having 80%, 85%, 90% of your money sitting in an IRA, as if, as if an IRA is a gambling casino. I mean, just the reality of it is you can have your IRA in treasury bills. You can have your IRA in CDs.
That would be
it is meaningless. It's absolutely meaningless whether the money's in an IRA or 401k, because that's just a wrapper on your investment. It's just a tax wrapper around your investment. What it's actually physically invested in could be just about anything, not just anything, but but a lot of things.
Yeah.
You can have stocks. It can be in commodities, unfortunately. It can be in, bonds. It can be in cash. There are a lot of different things. So he goes on. He's talking about his presentation, the stock market annuity presentation. The
guy told me that he doesn't consider himself a risk taker.
So he's giving an example of a presentation that he had given right here, by the way. This was his actual presentation. Here's what the guy said to him. Okay, so he said he's not a risk taker, is what the client said.
Literally 90% of his money was in an IRA.
Yet,
the guy told me that he doesn't consider himself a risk taker. Yet, literally 90% of his money was in an IRA.
And as we just established, you could have an IRA that's all cash.
Gosh,
I mean, it's just you can't make this stuff up.
Okay. I normally will go through and explain to them, listen, we've been on a ride right now where the stock market has been up for well over a decade now. Straight up.
I disagree with that statement.
Thank you.
Unless this was...
Thank you. Keep going.
Typed in, or typed...
No, this is recent.
Recorded in 1999.
No, this is recent.
Yeah. That's just not true.
It is just not true. And then what market?
Right.
There are several markets that had multiple years in the past 10 years where they were down.
Yeah.
If you're diversified, everything doesn't move together. So it's just plain false.
Gosh.
But it's the perception, because people just remember recent. 2022, everything, just that recently, it was all down. And it was down, and S&P 500 went down about 20%. That particular year.
Yeah.
So it's just false. And then other markets had other years in that 10-year period where they did not do well or went down.
Yeah.
So the reality is, no, it's just wrong.
I'll come back to that.
No, go ahead.
No, well, I'm thinking of this person talking to someone next week.
Mm-hmm.
And, okay, 2022 is a lifetime ago. If your last 2 weeks where we took oil tankers, we invaded Venezuela, we've got unrest in Minnesota. Mm-hmm. We've got, if 2022 is like the 1900s, if that's what's in your mind, and this guy's going to talk to you next week.
Mm-hmm. Yeah, no, exactly. It's just, people have very, very short memories.
Yeah.
Is kind of what you're saying, right? So I'll continue.
We're in a time right now, I mean, gosh, I don't even have to tell you about this, where the world's crazy. Okay, there's all kinds of things going on right now.
Making my point for me.
Yeah, go ahead.
No, I'm saying
the world's crazy.
Yeah.
So the 1930s wasn't crazy?
Right. World War II wasn't crazy.
World War II wasn't crazy. The Korean War wasn't crazy.
The Pueblo incident wasn't crazy.
The Vietnam War wasn't crazy. The oil crisis. I mean...
Deposing the Shah.
Yeah. Is there any such thing as a period in history that isn't, quote unquote, kind of crazy?
Right.
So to make it look like, gosh, this is brand new. That's recency bias. Like, we've never been through anything like this before.
Yeah.
This is brand new stuff. This is different this time, right? No.
Bad indicators. You can turn on any channel you want. You'll be hard-pressed to find any financial analyst that says the stock market's just going to keep going like this forever. You'll find some that thinks it's going to bounce around, some that think
that people think it's going to go up forever. I mean,
I don't know if I've ever heard anyone on a network saying it's going to go up forever and not bounce around.
Yeah, and the second point is true. It's going to.
Yeah.
That's what markets do. If it weren't for the volatility,
it'd make 1%.
Yeah, stocks wouldn't have a higher return than treasury bills if it weren't for that. It's basically the price for playing the game. It's the price for, when we look at returns, the reason that stock markets historically have had much greater returns than treasury bills is because you have to put up with something. It's like, why do people that lift weights and put their bodies through that, all of that hardship, they get bigger muscles because they put themselves through that hardship. And that's the way life is. The more we put ourselves through, the more, no pain, no gain, right? The idea.
It's going to get stagnant. Some may think we're going to have super inflation. You'll find a good percentage of people that think there's a crash or at least a correction coming in the near future. But there's nobody saying, hold on to your hat, the stock market's going to just keep going up. Okay?
Okay. So come back to that. Let me replay that one part.
Says the stock market's just going to keep going like this forever. You'll find some that thinks it's going to bounce around, some that thinks it's going to get stagnant, some may think we're going to have super inflation.
What if we have super inflation?
Yeah.
What is inflation?
Prices going up.
Who's raising prices?
I'll take companies we own in the portfolio for $500, Paul.
Which is why stocks protect us from inflation. So he's telling you that you want to avoid the thing that protects you from inflation if these people are right?
Well, he does know more than everybody that they're going to talk to.
That's right. I forgot that. Okay, yeah. I silly me.
You'll find a good percentage of people that think there's a crash or at least a correction coming in the near future.
Now, you'll have people that think it's going to continue to go up. You have people on both sides. And correction or crash in what market segment? So the reality is that, one market segment can go up while another one goes down. Like if you look at, let's just take a look at a couple of those years. He said last 10 years. Let's just use that. So 2018
was down.
Yeah.
It?
Well, you have 2018. Yeah, you had exactly markets were down 4.4% for large companies. Value companies went down about 14% that year. Next year, large went up 31, so it more than made up for that loss, that negative downturn. 27% for value stocks the next year. You've got 2015, you had large value went down, but large growth actually went up slightly. And, small value companies went down about 11% that year. So, you look at it and you look at small value, they went down in 2015, they went down in 2018. So that premise that the last 10 years has just gone straight up.
Right.
There you go. Wrong. And I'm only choosing a couple asset categories just for time's sake. But the reality of it is, it's just a lot of really super misleading stuff.
But there's nobody saying, hold on to your hat, the stock market's going to just keep going up. Okay? Well, because of that, and I assume you share in those same beliefs and philosophies, because of that, what I'd like to do is I'd like to talk with you about what I think one of the best safe money options in the country is, okay? I want to talk to you about a product where you can get stock market type returns without taking the gambles.
Who wouldn't want that?
Sign me up, man.
Yeah. I want to eat as much ice cream and Krispy Kreme donuts with Evan as we can possibly stuff in our mouths and gain no weight. That's what I'm looking for.
That's a plan.
And that is how this stuff gets sold. And we see this over and over again. And we got that guy that made $300,000 in 1 month.
And And, obviously we understand the ins and outs of that product, and we may bat that around at some point. But it's interesting that he talks about the casino, and then he says, I've got this thing that gives you stock market type returns.
Right.
Well, okay, I thought you just said the stock market was bad. And then what the client hears is stock market like returns, and they don't do that.
No.
The return varies if the market moves, but it's nothing like the return of the market.
And the studies that have been done regarding these products, they've been around a long time. And
I sold them back in what was it?
Mid-1990s, probably?
95, 96.
Yeah, I was going to say
they were brand new then. It was
exactly.
the Wild West.
I remember them. I remember sitting in a presentation doing that and going, how are they doing this? And I was one of these guys that I never got involved in because I didn't feel like I knew enough. So I went off, sold health insurance more than anything else, employee benefits, those types of things, 401ks. But I just never really I just didn't make any sense to me. But, if we look at the studies going back that far and say, well, what has the return been? And most of the studies that I've seen show that the returns have been in the neighborhood of government bonds.
Yeah, right.
I mean, that's basically it. And you're not taking any risk, so why should you get return? I mean, that's really the essence of it. So anyway.
Wow.
Thought you'd just enjoy that little sales presentation, some of the stuff we just shake our heads at. And that is why I often say that you can make a whole lot more money selling that stuff than you do being the owner of those products. Hey, this is Paul Winkler. Hope you enjoyed today's edition of the Investor Coaching Show. If you want to learn more about what we do, go to our website, paulwinkler.com. Until next time, I'm Paul Winkler, reminding you that I believe that more educated investors are more confident investors, and confident investors are more successful investors. Have a great one. Advisory services offered through Paul Winkler, Inc., an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Paul Winkler, Inc. does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.